Good afternoon, everyone, and welcome to Stock Market Today for Monday, April 7th. It's Alissa Coram here, and a lot of volatility. That was a big takeaway today. But have we seen a short-term exhaustion to the downside? Well, joining me now to discuss that and some stocks of interest today is my colleague, Justin Nielsen. And Justin, it's always great to see you, even when the market's bad. Still great to chat. So what do you
Thank
have?
you. At least you're not associating a bad market with me.
Yeah.
So that's good. But yeah, we'll see if we can get some learning lessons here. Again, just because it's a bad market doesn't mean it's time to stop learning. So we'll take a look at Marex, DoorDash, and a few others that have that kind of look. And then we'll also use Amazon as kind of a precedent, not only what it looks like today, but also go back a decade or so to 2009.
I like it. Okay, well, we will talk about those stocks, but first, let's talk about the current market. So I'm going to pull up our market surge charts and taking a look at the NASDAQ today. We actually finished in positive territory by a fraction, up 0.1% after a brutal open. We'll look at the intraday chart shortly, but today the S&P 500 down just 0.2%. And again, I mean, futures and the open were very ugly today. The Dow down 0.9%, also coming well off lows. The Russell 2000 hit a little harder heading into the final stretch of the day. A little delay here, but down about 1.1%, still coming well off of the lows. And after two big down days, we were opening on a third big down day here, Justin. A little bit of news or rumors or buying the dip or hopes of deals, whatever it was, a big pickup off lows and then a little bit of a settling of that volatility. But it was a pretty wild day.
Yeah. And, it was really interesting because we were going through this on IBD live, if you will. As this news was kind of coming out, we were seeing the markets rip. We were kind of wondering what's going on. We were hearing things, but you did a great job in kind of, hey, let's wait for confirmation before we start,
Pushing all our chips to the
right, exactly.
Going all in.
And to kind of just tell the end of the story here, it did end up not being, it ended up being a rumor. It ended up being something that was, dubbed fake news by the White House. And as much as it did come in, I think it was pretty impressive how well we held. Usually if you get that kind of excitement, and then your hopes are dashed across the rocks of the beach, it hurts a lot more. And, the fact that we held up pretty well, I think is pretty good. Now, remember, for the NASDAQ composite, as you showed on that intraday chart, at one point we were down 5% again. So having 5% losses day after day after day is pretty brutal. I mean, that's 15% that we were down, and more than 15% in just 3 days. That's really kind of on the extreme, on the downside and the pessimism. But we did get after that what was potentially an exhaustion gap, something that David Ryan was talking about on IBD Live. We did get a little bit of a short-term strength. Again, not as high as we were at the top after the rumors, but we didn't come in as hard as we probably should have if people were truly that bearish. But look, there's still a lot of uncertainty. It's still too early to call victory on anything right now. I think that there's going to be a lot of back and forth here as the news happens with what goes on with the tariffs, as negotiations happen, as countries come to the table, and some countries walk away. We're going to have to wait and see a lot. But certainly a good time to be really kind of very focused on your sell rules, making sure you're protecting yourself, and kind of tempering your eagerness for getting in on any last little bit of news that is unconfirmed.
Absolutely. Yeah. We want to see more proof, not just, an intraday spike or the first big up day. Right.
Right.
But we did get this undercut going back quite a ways, Justin, on the NASDAQ here, about a year, right? To April of 2024. and found some support there. So an undercut, and then the cues so I can get like an approximate closing range on the day. We closed in the upper half of the trading range. So a step in the right direction that could mean, as you, it seems like you were alluding to, potentially a short-term bounce,
Right.
given the exhaustion to the downside. But that does not mean by any means that the coast is clear, that it's safe to trade, that the volatility has subsided, and that the bottom is in.
Yeah. And, look, a lot of folks, that I talk to that, have been on the podcast that are short-term traders. I mean, they've turned into day traders, because they just don't want to go into anything overnight. So,
A lot of news
when we're
risk.
talking about a short-term bounce, that's the kind of stuff we're talking about. But to your point, Allie, the numbers that I have show that the NASDAQ composite closed in the 54% range,
Okay.
the Qs in the 52% range, S&P 500, 55% closing range, Dow Jones Industrial 52%. And as you mentioned, Russell 2000 a little bit weaker in the 43% closing range. So in the lower half there. But again, the fact that you did get kind of that shakeout, you potentially put in a bottom. Now we'll have to see if that bottom holds.
Right.
That would give, if you were coming in just and saying, you know what, I'm going to go into the Qs, or I'm going to really go aggressive, I'm going to go TQQQ. The problem with that is, even though we came off the highs, that's still quite a ways down to the lows. So are you willing to give that much up to potentially get close to the bottom? Or do you just wait for a little bit more clarity on the political side? A lot of companies are kind of, they're in their war rooms trying to figure out what they do, what their battle plan is. So I think that there's going to be a lot of reasons to kind of wait and see before putting on any long-term positions.
Right. Yeah. Any meaningful long-term exposure there. And that's definitely what I'm doing. We have talked about how in the past some market leaders will set up and become actionable just a scotch before a follow-through day. But it really is when you do get that confirmation signal on the upside for improved odds of the market really shifting gears, that it's at that point that you want to methodically but start adding exposure in a more meaningful way. So we just need a little bit more time here at a minimum, right? And that's if we don't get a lot of chop and a lot of head fakes from here.
Right,
So time to be
exactly.
flexible.
Yeah. And you know what? I did want to just show something real quick because, some of the areas of strength, again, I always look at the sector spider ETFs. And I do sometimes look at a combination of the sector spiders themselves, the 11 sector spiders, which Tech XLK was the top winner today. So it was interesting that, again, after a lot of down days, a lot of destruction in tech, that was what was up, the most today. But actually RSPT, which is the equal weighted tech
Interesting.
sector spider, that was up the most. That was actually up 1.4% versus 0.6 for XLK. So I thought it was a little interesting that there was a little bit more breadth out there, not just the mag 7.
Yeah.
But again, still way too early to call this, but I do like keeping track of this stuff on a daily basis, because at the end of the day, what we're looking for here is a trend, right? And you start with strength, and then you want to see confirmation and a follow-up of that strength or continued strength. So you got to start somewhere. So this is a day of strength in tech, a day of strength that was kind of broader on the tech side. Now it's a matter of, can it hold?
Can it hold? Right, exactly. And not surprising to see the dip buyers flow to this area. But again, will it lead to something more on the upside? A lot of that is going to have to do with the news flow. But what we do also know as active traders is sometimes you can have a market turn and act contrary to what we are seeing in the headlines. So we'll be reading the charts and trying to read the tea leaves
Yeah,
out there as well.
absolutely.
Okay, let's take a look at some stocks, Justin. So the first one, MRX, showing a lot of strength here, up 1.6% on the day. And we're seeing a relative strength line blue dot on the chart here. So that means the stock's price performance versus the S&P 500 has been exceptional for quite a while. And to see that for the stock when it's still trading 9% off highs from a
Mhm.
number of weeks ago is even more impressive.
Yeah, and so for something, that looks so normal in such a
Mhm.
destructive, what destructive area for the indexes, it's pretty impressive. And again, the relative strength line is showing that. But not only
Mhm.
that, but if you go to the weekly chart, this is a recent IPO. It came out not too long ago. It's in a space that's probably benefiting a little bit right now in terms of in the financial services specialty. We've seen a number of those stocks, CBOE, CME,
Yeah.
ICE, that TradeWeb, that were holding up pretty well relative to the indexes. Now, the problem lately has been a lot of these areas that have been holding up well. We kind of see the rug getting yanked out from under them, but it's still a worthwhile exercise to be aware of areas that are holding up a little bit stronger. And so this financial services specialty area, you know, Marex is providing liquidity, market access, infrastructure services. Those are all very helpful in heavier volatility times.
Mhm.
So the fact that this looks so normal in such an abnormal market definitely makes this stick out, and it has that new IPO to boot. Plus, it's not like the fundamentals are absent here. It's not like
Right.
you have to wait for those fundamentals to come on strong because they're already here. You already have double-digit gains on the earnings side and the revenue side. So those are two big positives as
Mhm.
well.
Yeah. And to your point about others in the group that were showing strength now look more damaged and this one's not, I think that's a great reminder of how in times like this, it's important to write that watch list in pencil, so to
Right.
speak, right?
Yes.
Because the leadership could change and it's getting further evidence day after day when you do have market weakness and market volatility, the ones that are going to rise to the top, that's important in terms of, okay, what are the stocks that are more likely to lead coming out of this? The ones that continued to hold up or showed that relative strength,
Yeah.
forming the right side of bases. So that's really what we're looking for. So if day after day after day, you're seeing a stock that just won't go down or is not going down as much as the broad market, that's telling you something. So
Yeah.
we'll
And,
keep note of it.
and to your point, writing it in pencil, look, this is a very fluid environment. Things can change very quickly. And, just as a case in point, let's just pull up XLRE for an example. So we were talking about how I mean, it was coming down, but a lot of the real estate, REITs were looking a little
Mhm.
bit stronger and stuff like that, but really got whacked today in a
Mhm.
big way. And look, if you look at the 10-year treasury, 0 TNX is what we use on Market Surge. If you look at the 10-year treasury, that was really coming down very sharply and had a very big move today. So, that just kind of shows you how fluid this market is and how quickly things can change in a very big way. So you just have to kind of keep that in mind and not,
Mhm.
again, push all your chips on a
Yeah.
single day. We really
Right.
have to wait for some of these things to trend.
Exactly. Like, oh, well, the market's weak, so that must mean defensive stocks
Right.
are the way to go, right? Yeah.
Yeah.
Just
Mhm.
we can raise cash as individual investors and try to
Yeah.
step aside.
We don't have to be invested. Like a mutual fund where their mandate is, hey, you're paying the mutual fund investor to be invested, not to be in cash. No one wants them to be in cash. If you wanted that, well, you could just be in cash yourself. So,
Mhm.
yeah, as an individual investor, we do have a lot more flexibility than the mutual funds.
Yeah. Okay, well, let's take a look at another potential watch list name, and that is DoorDash, up 1.9% on the day, found support at its 200-day line. Now, this is something that we talked about on IBD Live is, hey, maybe we can use our imagination here a little bit. If the market can get back on its feet, maybe we start seeing some of these stocks form double bottom bases. So DoorDash definitely on the list from that perspective. A little too early here, but this is the kind of thing that we're looking for. You take a step back on the weekly chart, that relative strength definitely there. Will this level continue to hold for DoorDash? We'll have to see. But these are some of the sort of green shoots that we're looking for here, Justin.
Yeah, you never want to get too bearish or too bullish. You always have to be thinking, okay, what if we turn here? What would that look like? And so instead of thinking of all these Wall Street types as being staunchly just numbers and nerds and everything like that, think sometimes we have to be a little creative and artistic. So I like that you're able to kind of put this on the chart and project out what that could look like. Now, look, at the same time, if this level doesn't hold, then you could absolutely see another leg down, more destruction, and everything like that. But you want to kind of have both scenarios in play. And there are a lot of stocks that are setting up like this. DoorDash looks particularly interesting because it came right to that 200-day moving average line, which, by the way, just being above the 200-day moving average line sets DoorDash apart. Right now, there's a lot of stocks below the 200-day moving average line. Chris Gessel was talking about how he was trying to build a watch list of just stocks that were above the 50 and 200, and that universe is small right now. So the fact that DoorDash got that support at the 200-day moving average line, you can start saying, okay, could this be a double bottom? Or if you want to go to 100 years ago in the Jesse Livermore shakeout plus 3, we've kind of altered that to a little bit like a shakeout plus, 5% to 10%. You could see, okay, 169.43 is a level. If you kind of look at, okay, if I get up 8 points from there to 177, okay, now we're kind of in that range of a shakeout plus 3 in spirit. So, we're just a few points away there, 177, 180, where we could be looking at that. Now, again, there's a lot that still has to be figured out in the market, but you can kind of see how some of these stocks, you can start making a bullish case for that. So instead of being too bearish, look at some of these things that could potentially turn this market. But again, we want to wait for that confirmation.
Exactly. And I think it's important now to have these stocks on our radar, again, even if things do fall apart from here. But if they don't, then we're ready, instead of scrambling day of, trying to figure out, okay, well, what's looking good? What am I buying? What's been holding up? Who are the leaders? We already have a little bit of a feel for it because we've done our homework.
And the last thing you want to see happen is kind of, once you do feel like, oh, yes, this market is moving, but now I have nothing to buy because I'm not prepared. And then by the time you're prepared, everything's extended. That's not a position that's very fun, because then you put yourself in kind of this, oh, do I chase things? Do I wait for a pullback? What if that pullback never comes? So, being ready is just, it solves a lot of problems for you. And as we were also talking about on IBD Live, DoorDash, while I picked this one, I mean, we got Netflix, we got Spotify, we've got, even Palantir, a lot of these that have kind of that look of potentially a double bottom here that could be in the making.
Yeah. Double bottoms, shakeout plus 3, which, quick little history lesson, came when it was 3 points on a roughly $30 stock.
Yes,
so that's why we're saying the 5.
This was back in the day when stocks used to split all the time, not like things are nowadays where you see, oh, $1,000 stock. Yeah, that's normal.
Right. Yeah. Okay. So we'll keep those on the list. And then we want to round things out with a look at Amazon. So what are you seeing here, Justin?
Well, so right now, one of the things that you could say is kind of a positive is if you look at, some of these levels, again, we looked at how August 5th was undercut. Remember, that was the yen carry trade and a lot of wringing of hands on that day, but it ended up being kind of a short-term bottom. And, then there's also the April area that you were talking about. So the fact that this is kind of holding up a little bit better is good, but I want to actually go back in time because there was a lot about Amazon back in 2009 that looked really strong and very different, and was one of the reasons why Bill O'Neill, the founder of Investors Business Daily, was buying this, despite the fact that go to the weekly real quick. I'm not sure if it'll do the calculation for us. If it says how far off its high it was. Okay, it doesn't. But this was still, when Bill was buying this kind of at 58 or so, or actually, I mean, there were a couple options, down there at 58 or so, and then again once it crossed 60, it was still well off its highs. Remember, the highs were at 100, so even at 60, this was still 40% off its highs. So you might think, well, gosh, how on earth would he get into this? But if you look at that daily chart, We're just going to do a quick compare and contrast here. On the daily chart, you can see how in November, that's really when this bottomed out, down at 34. So remember, from 100 down to 34, so well off its highs, but then it started coming up. And while a lot of things came down in March, and actually, let's pull up the S&P 500 for some contrast. The S&P 500 actually made new lows in March, but Amazon was looking much stronger. It was kind of flattening out. It was making it back above its 200-day moving average line. So it was in a very different position, than the S&P 500 was. Again, S&P 500 making new lows in March, whereas the Amazon was coming in, but not nearly as much. So when you start seeing those kind of positive divergences, that's kind of a early signal. And so we showed, like with DoorDash and Spotify and those, there is a little bit of that positive divergence right now. And so now we're just, again, kind of waiting for the market, because the market, if you go to, even on Amazon here, if you just kind of go to March 12th, that's when the market had its first kind of follow through day on March 12th. So yeah, right there. So if you waited for the market to be in agreement, you had Amazon really kind of coming out of this little flat area with the positive divergence. Those are the things that kind of make for a strong reason to start buying a stock, individual stock. So, as bearish as things are, again, I want people to have in the back of their mind some things that would turn them bullish. And one of the places to start is not just with the market, but the merchandise that you might be looking at. How can you see these things with positive divergences kind of play out in a positive way to where they'd be viable?
Such a great lesson there. Very important for this point in the market. So I'm glad you brought that up. Thank you, Justin.
You got it. Anytime.
Yeah. And it's a busy week. You can catch Justin not only on IBD Live throughout the week, but also tomorrow at 5 p.m. Eastern, our monthly Swing Trader status update show, streaming live on YouTube, 5 p.m. Eastern on Tuesday. And then, of course, he's the host of our weekly Investing with IBD podcast live on Wednesdays at 5 p.m. And we have John and Jack Kosar on the show this week. So they have a lot to discuss. So we have that to look forward to later this week with Justin. And coming up today at 5 p.m. Eastern, I am pleased to welcome back Jim Ropel to our monthly market report show. So I know a lot of you who are regular Stock Market Today viewers, as well as IBD Live viewers, love getting hedge fund manager Jim Ropel's perspective. And so that's happening today. He and I are texting, sharing notes about what we're going to chat about. So make sure you tune in live at 5 p.m. Eastern on our YouTube channel. And of course, you can always catch the recording on YouTube and at investors.com/video. So we have that coming up. Lots of fun stuff happening this week. I also forgot to mention Justin's doing a short selling strategies webinar along with David Saito Chung and our own Scott St. Clair coming up this Saturday. So for more information on that, head to investors.com to get more information. All right. It's a busy week, but a good week to have a busy week. Lots of chances to learn and engage with our team. So we'll see you at 5, and we'll also see you throughout the week.